Stop chasing. Look, it's Marcel, aka Honey Bunny Sunny, and you know I'm on a mission to make you some money. Listen, if you are tuned in for the first time, welcome, right? If this is your first time seeing my face, welcome. For everybody else, let's get some likes and hearts on this video, some comments to get this into the algorithm. Look, I got an incredible video for you guys that I think is really going to help you start to see more profits in your trading, right? Matter of fact, I know it's going to help you see more profits in your trading. Before I jump into it, man, we had an incredible day in the market today. It's always around the holidays, right? It's always these times when everybody's kind of like doing other things that I like to call it a sneak attack comes in, right? Where there's opportunities and people are getting rich while other people are preoccupied getting prepared for the holidays, right? Always stay in tune, always stay locked in. If you're in the Prosperity Collective, you will not miss out on opportunities like this, right? This is what I did today. That's why they call me Honey Bunny Sunny. This is another one that I did today, right? Look at what somebody from the group said about me and Zay, right? When you're in the Prosperity Collective, you get the cheat code to success. I'm gonna be real with you, right? I can't remember the last time we called a losing play. Like that's how much of a run we've been on. Ask anybody in the group. TPC, chime in, right? If you in the group, chime in. All right, now today I want to talk about one simple thing that you can do to get you familiar with stocks, which will ultimately lead to you having what I like to call trader instincts, which will then lead to you making way more profits in the market. It's a very simple yet tedious thing to do. Now, there are platforms that allow you to do this thing, but I recommend doing it manually. So this is a version of back testing, right? I know a lot of people that trade like Forex and other platforms look at back testing in a specific way, but to me it's anything that's just looking to make sure that what you're implementing is being implemented like at a high probability, right? You're testing your strategy is essentially what it is, based on the previous market, which is, you know, hence the name back testing. So I think doing it manually by understanding what your strategy is and then going and locating that on the chart, right? Pick a time frame. Pick a period of time. I keep saying time frame. Pick a period of time and then look at it on the daily and the weekly time frame to test it, right? So all right, let's just say you want to choose the daily time frame and you want to look back a year and your strategy is failed two downs, like using the strat method. We know that failed two downs is a really strong reversal signal. So if you take calls, you know, at the close of a failed two down, you could literally go back for a year, keep your strat assistant turned on your charts and go back for a year and literally monitor every time that took place and what happened each time it took place. Then we're going to start getting more granular, more detailed and drilling down into that and seeing, you know, even more data, right? Like, okay, now let's say we got 100, failed two downs in 2 years. Okay, how many of them had a 2% or more increase the following day? How many of them, went below the previous candle, right? How many of them retested before they went up, right? You could just start coming up with a series of questions to ask yourself to really get an understanding of what happens when a failed 2D takes place. And then what needs to accompany a failed 2D in order for it to get to the heights that you're trying to get it to, right? So if I'm looking at strat method, like I said, and I want to see a failed 2D and I'm trying to optimize like the biggest moves, I want to go and see every single failed 2D that had an astronomical move and what specifically was it about what happened before and after it that made that take place. Okay, this is how you start to anticipate plays and be able to catch the play before it happens and the actual play, right? So it's like the appetizer is what I like to call it. You know, a lot of times like we're waiting for confirmation when we get a reversal signal. So if the confirmation is a bullish green candle, that means that if you can catch that confirmation before it confirms, then you already got in profit, and then by the time it confirms, now you can just add contracts on. Also, if it does fail, right? Say you try to take an early entry after it failed 2D and it fails and it starts to creep down to the point where it's going below the what your stop loss will be, which should be that previous low. Then all you got to do is just cut your losses. But because you're not all the way in full size, it's not going to be that big of a loss. This is how you maximize your profits. All right, so take the time, right? We got the holidays, all of that stuff. It's great to spend time with family, but also make sure that you're taking some time to pour into yourself, right? Because this is ultimately what's going to free up your time to spend more time with family throughout the year. So take the time. It's going to take some hours. I'm not going to lie to you. It's going to take some hours to really sit and go through all of the failed 2Ds or whatever your strategy is, right? You could go and look at all the bull flags from the past year, 2 years. You could look at all the bear flags from the past year or 2 years. You could go look at the all of the head and shoulders from the past year or 2 years on a daily time frame. It's totally up to you, right? But all I recommend is that when you do figure out what strategy you want to look at, like what pattern that you want to watch for and its result, you just make sure that you stick to that and you ask as many questions to yourself about the things that you're seeing on the chart throughout the course of that time. Okay, so for 2 years, go back and look. All right, so I'm gonna pull up a chart and just kind of give you an example of what I'm talking about, right? I'm gonna pull up Palantir so that we can get more of an illustration of what I mean, right? Okay, so all right, so I got Palantir pulled up here on the daily, right? And we can look at it. All right, just yesterday we had a failed 2D right here. We had a failed 2D right here just yesterday. Okay, that's one. There was another fail. Well, I think that might have been a failed 2up. There's another failed 2D right here. What did it do? It went up. There's another. Let's see if we can find another failed 2D right here. What did it do? It went up. Right. There's another. Let's see. Yeah, this is a failed 2D right here. What did it do? It went up. So you want to take your time, and this is, this right here is only showing back to April, right? So just keep looking. Here's another one. Fail, let me just make this bigger because this is probably a little hard for you to see. All right. Okay. Right here, another failed 2D. What did it do? It went up the next day. It went up the next day. It formed a failed 2 up, and then it went down, but it did go up the very next day, right? So you would take note of that. You would talk about, okay, what was taking place before that failed 2D? Did that failed 2D, bounce off of something? When it went up, how far did it go up? What percentage did it go up? What was the high of that next day? After it came back down, how long did it take before it went up even higher and touched the the top part of the Bollinger Band? Right? These are all things that you ask yourself, right? Obviously, when you get confluence, when you get some sort of you get any strategy that coincides with another strategy or runs parallel with another strategy, is typically going to be higher probability. So when we get these at order blocks, any sort of inside one candle or a failed 2D at an order block, it's going to do pretty significantly. It's going to go up pretty significantly. You could do the same thing with the failed 2 ups. Right here, you got a failed 2 up, then it came down, right? Failed 2 up, it came down. Right, so just going through and taking note of each time it did that. Okay, failed 2D went up tremendously. Failed 2D went up tremendously. So these tend to go up the next day. Failed 2D gapped up. Right, so this is a ton of data, and we're only back to January. Right, you can run this back as far as you would like. It could be 1 year, 2 year, 5 years, and you can take as much data as possible, and then you're just going to see every time that it did what you wanted it to do, and then you're going to write a probability for that. And then you're also going to write a probability for, okay, when it had this and this was the probability. When it just had this was the probability. When it had these three things, this was the probability, right? And you want to just, compile all that information and study it, read it. It's going to be tedious, but what it's going to do is it's going to increase your instincts. It's going to allow you to predict things before they happen, right? We can go to another stock. We could go to Meta. The same deal. Right, we got a failed 2D right here. It shot up, right? Let's see if we get some more. A failed 2 up right here, and it came down right here, right? Failed 2D right here. It went up over the course of what, a week and a half. So you gotta just see, right? Like, what's the shape of the failed 2D, right? Did it have a very long wick, right? Is it a hammer and a failed 2D, right? Is it bouncing off of a Bollinger Band? Like, is it coming out of a consolidation? Like, all of these things are questions that you can ask yourself. I'm going to stop sharing my screen. All of these things are questions that you can ask yourself to get, more information, right? You want to become an observer of the market at all times, close to the holidays, consistently, even if you're not trading, right? A part of trading is observing and back testing and going back and reviewing, looking at what worked out, what didn't work out, why something worked out, right? Pattern recognition is what's going to give you the ability to predict the future and ultimately set you up to get bigger plays, right? I know a lot of y'all get into plays and then you wind up getting out way too soon. You'd be like, damn, I just wish I could have stayed in a little bit longer. When you understand how the markets move and the different catalysts that can impact, those bigger moves, you'll see yourself making a lot more money, not every single day, but when the opportunity presents itself. All we're trying to do is set ourselves up for those big plays and then catch the base hits on a daily basis, right? The big plays, they come, every now and then throughout the year, and it's going to be your job to be able to, pick it out based on what you've seen over the past few years. All right, I hope this video was helpful. It's always love over here. I hope y'all have a happy holidays, all of that good stuff. Spend time with your loved ones, cherish them. It's so important. It's all you have in this world, right? And if nobody told you, I love you. All right, enjoy yourself. Remember, invest smart, live free. I'll see you in the next one. Peace.